Hello everybody, welcome to another breakdown. In this video, I will be discussing both my EU and GU longs on March 7th, 2024. So let's go ahead and get right into it. As you can see, both were external continuations because we were externally bullish, and I'm just looking for the continuation into the upside. Here's the before and after for EU, and here is the before and after for GU. All right, so let's go ahead and get right into the breakdown. We can start off with GU. It was a bit sloppy in terms of the price action, but if I want to make this breakdown relatively straightforward, I know what my direction is. It is bullish just by looking at where I am from the left, right? It doesn't really matter what's happening from a swing perspective because I'm only looking for a scalp entry and a scalp target. So I know that previously I am bullish, meaning that the only way I can take a bullish continuation means that I need a bearish to bullish transition within this region, right? And where does that occur? Right, that occurs after this CBOS, which also leads to a second CBOS. And why is this important? Because this is the low that created the final high. So the break of this low, right, is technically a type of liquidity sweep, but more importantly, it's a continuation BOS, meaning that we want to continue our trend into the upside. We don't think that this is, or we know that this is not enough information for us to want to be bearish, right? So with the CBOS in play, right, we immediately take out, right, the high that led into the break of structure or the CBOS. So because that occurs, I now am I'm now aware that I have a liquidity grab continuation, which is one of the three models that we use in the Endura program, or the three main models. I'm in the works of making a fourth one, but as the name suggests, a liquidity grab continuation. It just means a liquidity grab based on the rules that are in the liquidity grab video that match the previous external direction, which is bullish in this scenario. Right, so once this occurs, I now know that this is technically my invalidation based on the model in play. So all I need to do now is find a reason to be bullish, right? And this occurs right, not here, right? I did not buy here solely because we kind of swept the high. We didn't give a substantial break of structure, and I don't like to see momentum be very heavy coming into my POI. This just gives me a smaller probability, just based on my POV, that we will continue higher. So I need a bit more of an explanation. So, right, because this POI sustained itself, this gave me a confirmation that, oh, okay, we swept the high, but we were unable to break the POI low, meaning that the LGC is still in play because the LGC invalidation is still in play as well, but the internal structure as well from low into high is also still intact. So as I'm zooming in, right, this is a potential sell zone, right? But the reason why I don't sell here, right, is because of the reasons that I just stated, right? Meaning the LGC, the previous external trend being bullish, right? And if I'm zooming into my my micro time frames, right, I know that this POI is valid because we had a CBOS come into it, meaning there is a confirmed reaction coming into play, right? And I also know the final wick low that is taken so that we come into the POI. So once this is given, right, then even if we get some type of reaction from the POI, the only way for this POI to be confirmed, and I mean this POI here, the only way for this to be confirmed in order for us to confirm a bearish reversal and a reason to be bearish, that means that the POI needs a CBOS, right, to confirm itself. And if we are noting, let me delete the stuff. If we are noting, right, reactions based on POIs, then I have to understand solidified points as well. And my solidified point is shown here, right? We break a wick low and this low comes into the POI. And as you can see, no wick low is taken from there, meaning this is the final low coming into the high. So once we do break a type of low, this is technically solidified, but my main priority is, right, the potential liquidity grab continuation shown here. And the reason why I'm taking my execution is because I have an M1 inefficiency here. And if I have an inefficiency shown and I have my invalidation here, right, I could have put it here, I could have put it here, and I could have put it here. But the reason why I put it here is because if we break this wick low, then this POI is fully confirmed and I can favor the bearish sense, right? But obviously that did not happen. And immediately after coming into the inefficiency, got a bit of drawdown, but the invalidation held its place and it came into my target. Right. Well, and if you're asking me, or if you're asking yourself right now, why didn't he hold longer? Because obviously this could have given me a much bigger move, right? About a 1 to 10, 1 to 12, maybe 1 to 15, maybe even. And it could still continue higher, but that's not what I'm looking for. If I'm looking for an external target, let's say we zoom out, and if we look at what high seems significant, let's just use this as a reference point, right? Why is this a reference point? Because this could be a target, then coming into a potential supply zone, and then you could see some type of conversion, right? So let's just use this high as reference. If I'm aiming for this high, then I'm aiming for a potential major intraday high. Therefore, if I'm taking any type of execution, right, then I cannot use the same micro parameters. I would need to widen my SL into the liquidity grab continuations invalidation point, because, right, if I was to have held and I am excuse me, and I am following potential order flow to convert on me or to potentially hit my trailing SL, then we have a low being swept here, and this low led into the POI high. So if the POI high then breaks here, then that is a liquidity grab. My trailed stop has been taken, and then it would have hit the external target, right? So what do I do if I'm looking for the external target? Okay, then I have to widen the SL to fit the entire model, right? And if I'm taking this execution, then once we break this high, my invalidation is now here. Why? Because this is the last time we broke a low to come into the high. And I'm referencing the external trend, not the internal trend. So with this invalidation in play, we now create a new high, right? And that low isn't sustained, right? And that creates a new high. So that means my new invalidation is at this low here. Sorry about the magnet. My new invalidation is now here, right? And then you could see a CBOS and a continuation. So now, rather than my SL being at the original invalidation point, right, I am looking at invalidation point 1, invalidation point 2, invalidation point 3, and then this would have led me into the target, right? And the RR isn't that much more different. It's a 3.83 R compared to a original 2.5 R trade. But if I was to have used the internal perimeters like we stated before, then I probably would have hit my trailed stop before hitting the target. So we have to be realistic with the types of targets that we aim for. If I'm aiming for an H1 target, okay, then I cannot use a micro invalidation because that could be taken out before we then reach the minor intraday target, right? So overall, a success, and I am happy with the 2.5 R in a span of 25 minutes rather than a 3.8 R over the span of an hour and a half. Both are good, but I have my preference, and we'll just leave it at that. On to the next, the EU trade. Right, this one was a bit cleaner, in my opinion, compared to the GU trade, where I am looking at, right, during session, right at the New York Open, we came into an H1 demand zone, and in this demand zone, I obviously just cannot buy from here because I know that internally we have to be bearish in order to reach the POI. So we zoom in, and I am obviously aiming for the previous external high, And if you can see another red line here, we'll come back to that in a bit. But I'm mainly aiming for, right, the previous external high, and I'm looking for an internal transition to take me into that high, right? And I had thought I had missed this trade initially, because if we're looking at this from an internal trend standpoint, I understand that we are still bearish, right? Solidified high, solidified low, right? Coming into the pullback, that pullback high could have been here as well. I just use this because of the internal solidified point, but it doesn't change the result. High into low, high into low, right? The reason why I was actually looking to enter a bit early was because we had a POI present, we had an internal CBOS, and that CBOS led into internal unwillingness into the upside. So I was potentially looking to buy from this here and have my perimeter be a 5.5 pip SL right around here, to then go for the same target. But unfortunately, that did not reach my my point of interest. So rather than ignoring the trade completely, I wanted to see if I could anticipate a better scenario. And I noticed that in this 30-second time frame, we do have a internal conversion, right? This sell to buy move. And as you all know, I really like these sell to buy moves. And this sell to buy move then came to be mitigated. And the reason why I have this being my invalidation is because if we are to disregard, right, the internal bearish trend, this is still just a CBOS. Therefore, the potential X or the potential minor intraday trend is still potentially bearish, right? Therefore, if we have a CBOS and we then solidify the high by breaking an internal low, then I now have to favor the bearish side, right? That's why my invalidation is there. Okay, so coming back into my M1 POI, I kind of took my trade based on the inefficiency here, and I put my my SL at the low that I talked to you guys about, and from there, all right, we saw pretty much a very quick 30 pips into my 1-to-4 risk to reward ratio, and we also had an internal LGC, which is, like I told you guys, a liquidity grab based on the or that is based on the previous direction. So once this order flow is confirmed and we get the reaction from here, we break here. My invalidation is now at the wick low, right? That would be my new invalidation. We then come here. We have a CBOS leading into a liquidity grab continuation because the order flow here is bullish. Therefore, my new invalidation is here, and I've already secured a little bit over a 1-to-1 risk to reward. And once we then have another CBOS and we have a continuation to the upside, then my invalidation is here. And then from here is where we achieved that TP, right? And the same thing with GU, where I could have held this a bit longer. That means that if I'm looking to hold this a bit longer, then I would be looking for, right, either a POI that I had referenced out here. Sorry for the mess. I actually had a POI referenced here, but this POI doesn't really make sense for me as a sell zone because the internal here is bullish and we're on the M30, so we're talking about our major intraday time frame, and therefore this would more so be a type of target, right? But I just went ahead and, went for the previous external high. But if I was to look for an external liquidity point, right, we're talking about a major intraday on target, then I would need a minor intraday perimeter. Therefore, if I'm aiming for this high, it's not the same perimeter. I would need to widen my SL. And as you can see, 3.28 is less than my 4R that I achieved from my scalp trade. So I'm not saying, or I'm not implying that scalping is better than minor intraday. It's just that this approach gives me a much better risk to reward, and it does it in less time, right? The main thing as to why I prefer scalping over minor intraday is because I know whether I'm right or wrong very, very fast, right? And because I can only trade during New York session, then I kind of want to be in and out. I don't really want to hold over, especially get swap fees over the next trading day. right? I'd like to be in and out within the first 4 hours of the session, and all of this, and these trades fit both of that, or both of these, excuse me, both of these trades fit that criteria. So I'm gonna stick to it. And this also ties into the efficiency concept that I talked about in the Twitter a couple of weeks ago, and all that is pretty much, if you're a profitable trader, it's more so a way to analyze the duration of your trades and how those ratios affect the total return. Another topic for another video, and we might come back into that. But other than that, that concludes today's breakdown, and I'll see you guys in the next video.